Hi everyone, this is Mike Kramer. Today is Tuesday, November 19th. It's around 5:30 New York time. The economic calendar the rest of this week is going to be pretty uneventful here in the U.S. The major data that we're likely to get is the S&P Global PMI data points that are due on Thursday, and then some University of Michigan numbers Friday morning. Outside of that, it looks like we're probably looking to build up to and waiting for the FOMC minutes, the 26th. But until then, really not much else happening on the calendar from a macro standpoint. Tomorrow, though, we will be getting Nvidia's earnings. They'll be coming out after the close. It looks like they're expected to come out sometime around 4:20 p.m. Eastern. So that will obviously be a big market moving event. And we'll get to that in just a couple of minutes. But first, I just wanted to run through the typical stuff we go through. So if we just start with the euro, we did get this consolidation finally this week. Not really surprising given how much we've seen it decline. You can see we got oversold here with the RSI breaking below 30, below the lower Bollinger Band. Now we're trading sideways and consolidating sideways, which I think is important to take note of, because if we continue to just consolidate sideways, it tells you a lot about what probably the next move will be. The next move will probably be lower. As of right now, though, I think we can watch the 10-day exponential moving average, since that's trading below the 20-day. That's potentially the first level of resistance here, and call it 106.5 area. If you can get above that, you can start looking to the 20-day moving average. But any failure at the 10-day moving average probably means that we're going to be taking, the next leg lower is going to be starting. It's really the same thing for the pound, where we've just consolidated the last couple of days, basically moved back in the Bollinger Band, moved off the oversold conditions. 10-day exponential moving average is sitting up here around 127.40. That's going to be the level that we need to really pay close attention to, because if we can't get above that area, that's going to tell us as well that the next major move of significance is probably likely to be lower. I mean, you can see going back how the 10-day has served as turning points. Crosses above and below have served as turning points for this and many other currencies and other assets. The same thing with the yen. In fact, when you look at the yen, you can see how we've just been finding support the last couple of trading sessions right at the 10-day exponential moving average. We did get up to this 155.60 area, and it looks like now we've come back down. Again, the yen has really weakened significantly, got really close to being overbought. So again, not really surprising to see any of this taking place. I would just be watching this 10-day. If we get below the 10-day, we can start strengthening and heading back towards 152.75. If you can't get below the 10-day, I think you're just going to start seeing us continue to head up and take out these highs. When we look at copper also beating it up, obviously, the last couple of weeks. You can see how we hit the 10-day exponential moving average today and just bounced right off of it and started moving lower again. So you can see how important this level can be for overbought and oversold conditions. And so right now we've moved back in the Bollinger Band, and we're watching that 10-day exponential moving average. Obviously, a break below this 405 area starts setting up, moves back into the 380 to 390 range. And it's really the same thing for gold. Gold today managed to get just up to the 10-day exponential moving average. It closed just a little bit above it. So I wouldn't really call that a breakout. I would say that's just testing resistance. We need to see probably another day or two of a further move higher for that to happen. Clearly, the 20-day moving average is all the way up in here, which again also suggests that there could be some further room for gold to run. Again, pretty much very oversold, so this seems like a typical sort of rebound that we're seeing. Again, if we can't get above, if we stay right in this area, that's really more resistance than anything else at 26.30. So if we can't really get much beyond this 26.30, 26.50 region, probably next major move starts heading down again. When we look at the DAX, that was sharply lower today. We did manage to rebound some. This big area of support at 18,875 is the area we care a lot about. DAX is at nowhere close to being oversold at this point, so it could still go significantly lower from here. 10-day exponential moving average clearly serving as an area of resistance, and you get a better sense of what I mean when you start looking at this chart, how we're just kind of clustering around it and not really creating a trend. And those are the things you want to keep in mind when trying to determine whether or not you're really truly seeing some sort of breakout or change in trend. And right now the 10-day is moving lower, and so we're going to want to see if the DAX continues to move along with the 10-day just lower towards this 18,860 area. Again, we're not oversold, so if we start heading lower and we break below 18,860, that opens the door again to this area down in this area at 18,320. Meanwhile, resistance I still think probably lives somewhere up in this 19,400 area as well. The Footsie was a little weaker today as well. Again, you can see the 10-day exponential moving average basically is what is serving as resistance right now, not really able to meaningfully clear it. Lower Bollinger Band, we're not in an oversold condition, so clearly the Footsie can continue to move lower. There appears to be obviously a downward sloping trend. Support continues to still be at 8,000. A break below 8,000 starts setting up for some of these lower 7,900, 7,800 levels. But again, 10-day is very important. You get above that and you can able to sustain it. 8,200 probably becomes your resistance, and maybe even all the way up to 8,300. And now tomorrow with Nvidia reporting results, this is going to obviously be very important for the U.S. markets. And again, what I wanted to focus on just really quickly was just giving you a sense that the market is going to potentially do something that could be opposite that of Nvidia, depending upon where implied volatility goes out. So in August, Nvidia fell 6% on the day it reported, after the day it reported results, and it went on to decline, sharply thereafter. But what was also important was that going into results, the VIX 1D, which is a measure of short-dated implied volatility, went all the way up to 21.3, and at least as of today, implied vol on the short-dated kind was only 11. So it's possible we see the VIX 1D rise materially tomorrow. You can see that on August 27th, the VIX 1D was only around 9. So it's still possible that you see the VIX 1-day really move sharply higher tomorrow. And that's going to be very important, because if it starts going up a lot, it's possible that you get a repeat of what happened to the S&P 500 in August. So on the day Nvidia reported results in August, if you go and you look at August, if you look at this date on August 29th, again the day after, you can see that the S&P 500 actually traded sharply higher the morning of the results. Right in here, traded about 60 basis points higher to open, and then continued to move higher, eventually giving back all those gains as the day progressed. And this is really important to take note of, because basically what happened in this case was that implied volatility fell dramatically the next day, and that caused the S&P 500 basically to rally, falling 8 points back to 13. So again, I would be very cautious of thinking because Nvidia is higher, maybe the market goes higher, or because Nvidia is lower, the market goes lower. I think you just have to look at where implied volatility levels are tomorrow as the day progresses, because if implied volatility is very high, you may get some sort of rally in the market no matter what Nvidia's results are, and vice versa. So it's just something you want to probably keep in mind as your game plan for what's to come. At least when we look at the NASDAQ, you can see we're in this rising wedge pattern, the blue outer rising wedge. We've tested that area a couple of times in the past down here back in late October, early November. We've tested it again more recently now. And so again, this comes at an important point because Nvidia's results are obviously going to play heavily into the direction of where the NASDAQ goes at this point. Right now, you can see that the NASDAQ is basically sitting right at the 10-day exponential moving average. So we're waiting to see if there's some sort of confirmation here, whether or not we can break out and gap higher and keep moving higher. And then maybe you can move up to this, call it 21,300 area, which would be the upper end of the rising wedge, or really start breaking down here and potentially even gap below this 20,300 area, which would open the door to much lower levels. It's similar for the S&P. We're just at the 10-day exponential moving average. We gapped below it the other day. You can see that we've been doing this kind of back and forth, where we did this back in late October, early November, and then we gapped back above it. So again, upside probably somewhere around 6,025. If you break 5860, you're talking about 5690 next. And then after that, you're talking 5,600. Now, the Dow has Nvidia in it, which is something it hasn't had in the past. It was just recently added. So all of a sudden, the Dow now becomes a proxy of Nvidia as well. And so you have to be mindful of that. It is now included in there. So the one difference is that the weightings are different, because the Dow is a price-weighted index, and Nvidia only trades at $150. It doesn't have the biggest weighting in the Dow like it does in the S&P and in the NASDAQ. In fact, I think UNH is still the largest, either UNH or Goldman Sachs. Goldman Sachs may now be the largest component of the Dow, because, again, it has the highest price. It's just a different metric. So you really have to be mindful of this, because this is potentially one sort of oddity that makes the Dow a little bit different than some of the other indexes. So at least, again, the Dow below the 10-day exponential moving average, we still have this gap to fill down here at 42,200 or so. So again, right now, we're just kind of keeping an eye, your upside resistance somewhere around 44.3. And I think right now your downside resistance support somewhere around 42,000. I think the Dow is just kind of in the middle of whatever it is it's going to do next. And, broadly looking, if we look at the other indexes, those are kind of set up in a more bearish sense. And so I would be watching more for downside, but it doesn't mean that it happens necessarily on Thursday after Nvidia reports results. Anyway, have a great rest of your week, and we'll see you next. Bye.